Hey everyone, welcome back to Corporate Decoder, where we peel back the layers of corporate filings to reveal the juicy bits. And today we're looking at Regency Centers Corporation. Get ready, because this report is all about dividends, and when it comes to dividends, well, let's just say money talks. So what's the big news from Regency Centers? It looks like they're about to put some serious cash back into the pockets of their shareholders. This report is all about a very important decision made by their board of directors a while back, on August 5th of last year, 2025. They decided to declare some dividends. Now, for those of you who aren't steeped in the world of finance, a dividend is basically a slice of the company's profits that they decide to share with their owners, the shareholders. It's a way for companies to reward investors and signal that they're doing well and have enough cash to share. First up, let's talk about common stockholders. Regency Centers Corporation declared a dividend of $0.705 for each share of common stock. This money is set to be paid out on October 2nd, 2025. Now, who gets this money is determined by who owned the stock on September 11th, 2025. Think of it like this: if you owned a share on that specific day, you're on the list to get that dividend payment. But it doesn't stop there. They also made a decision about their Series A preferred stock. For this special type of stock, a dividend of $0.390625 per share was declared. This payment is scheduled for October 31st, 2025. Again, the people who owned this Series A stock on October 31st, 2025, again, the people who own this Series A stock on October 16th, 2025, are the ones who will receive this dividend. And for the Series B preferred stock, they declared a dividend of $0.367200 per share. This dividend will also be paid out on October 31st, 2025. Just like with the Series A, the shareholders of record on October 16th, 2025 will be the ones receiving this payout. It's important to note that the date mentioned for the Series B record holders appears to be a typo in the filing, as it states Series A first stock instead of Series B record holders appears to be a typo in the filing, as it states Series A third stock instead of Series B record holders appears to be a typo in the filing, as it states Series A third stock instead of Series B preferred stock for the record date. This is something we always keep an eye out for, and it's a good reminder that even in official documents, typos can happen. Let's dig a little deeper into what these preferred stocks mean. When a company has preferred stock, it's a bit like having a different class of owners. These preferred shareholders typically get their dividends paid out before common shareholders do, and they usually get a fixed amount. The cumulative part means that if the company misses a dividend payment, those missed payments add up and must be paid later before any dividends can go to common shareholders. The redeemable bit means the company has the option to buy back this stock. In this case, Regency Centers is clearly signalling financial health and a commitment to returning value to all its shareholders, both common and preferred. It's a positive sign that they have enough operational success to distribute profits in this manner. Beyond the dividend news, this filing also points us to a press release that was issued by Regency Centers Corporation on August 6, 2025. This press release likely contains more details and context around these dividend announcements and any other significant events from that period. It's often where the company provides a more narrative explanation of their decisions. Now, looking at the structure of this report, we see two entities, Regency Centers Corporation and Regency Centers LP. Regency Centers Corporation is the main company, often called the parent company, and Regency Centers Corporation is the main company, often called the parent company, and Regency Centers LP is a partnership that the corporation likely manages or has a significant stake in. They are incorporated in different states, the corporation in Florida and the LP in Delaware, which is a common practice for business flexibility. The company's common stock, with a par value of just 1 cent per share, trades on the Nasdaq under the ticker symbol REG. This is what most everyday investors would think of when they hear Regency Centers stock. Then we have the Series A preferred stock trading as REGCP and the Series B preferred stock trading as REGC. And 5.875% of these, 6.25% for Series A and 5.875% for Series B, represent the fixed annual dividend rates on the preferred stock's par value. These are important for preferred shareholders as this is their guaranteed return. Interestingly, for Regency Centers LP, there's nothing listed under the securities registered. This probably means that the LP itself doesn't have publicly traded securities listed on major exchanges under its own name, but rather its structure and performance are tied to the parent corporation. The filing highlights item 8.01, which is for other events. This is where companies disclose significant events that don't fit into the more specific categories of other items in an 8K. In this case, the dividend declaration is the other event they are reporting. There's also a standard disclaimer here that states the information furnished, like the dividend declarations, is not considered filed for certain legal purposes. This means it doesn't technically become part of the permanent SEC record in the same way as other parts of a filing might, and they are not liable under specific sections of the law for this furnished information. It's a common legal nuance in these reports. Finally, the report is signed by Michael R. Herman, who holds dual roles as Senior Vice President, General Counsel, and Corporate Secretary for both Regency Centers Corporation and its partnership. This signifies that he is formally authorized to submit this report on behalf of the companies. Now let's put on our analyst hats and look at the bigger picture with a Warren Buffett-esque mindset. The declaration of these dividends is a strong signal. It tells us that Regency Centers Corporation is likely generating healthy cash flows and has confidence in its future earnings. For common shareholders, receiving a dividend is a direct reward, but for preferred shareholders, it's a confirmation of the stable income stream they invested for. The fact that they are paying out dividends on both common and preferred stock suggests a balanced approach to capital allocation. They are meeting their obligations to preferred shareholders while also distributing profits to the more risk-tolerant common shareholders. This kind of action often boosts investor confidence. However, we always need to look behind the headlines. While the declaration of dividends is great news, we don't have specific financial tables in this particular snippet that detail the company's revenue, expenses, or overall profitability for this period. An 8K often reports on a single event, and this one focuses on the dividend declaration. To get a full understanding of why they can afford to pay these dividends and whether it's a sustainable practice, we'd need to look at their latest quarterly reports like a 10Q or their annual report, the 10K. Those reports would contain the detailed financial statements that show us the incoming cash and outgoing costs. Without those numbers, we can only infer the company's health based on this decision. It's like seeing a friend buy a new car. You assume they have a good job, but you don't know their exact salary or their other bills. The key risks to consider would be if these dividends are being paid out at the expense of necessary reinvestment in the business, or if they are taking on debt to fund these payouts. For a real estate investment trust like Regency Centers, which focuses on shopping centers' economic downturn, the business, or if they are taking on debt to fund these payouts. For a real estate investment trust like Regency Centers, which focuses on shopping centers' economic downturns, changes in consumer spending, or increased competition could impact their ability to generate lease income, which might eventually affect their dividend paying capacity. In conclusion, Regency Centers' dividend declarations are a positive indicator of financial stability and a commitment to shareholder returns. It shows they are managing their business effectively enough to share profits. Keep an eye on their future filings to see if this trend of robust dividend payouts continues and how it aligns with their overall growth strategy. What do you think about these dividend announcements? Are you a shareholder or are you considering becoming one? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up. It really helps us out. And for more dives into corporate filings, don't forget to subscribe and hit that notification bell. Also, join our Discord community for more in-depth discussions and analysis linked in the description. Thanks for watching, and I'll see you in the next one.